Alrighty. Good morning, good afternoon, and good evening. It is Wednesday. Happy to hump day, and most of the world is moving along kind of fine. Nothing major in the sense of like it's nervous or crazy. It's just kind of smooth. We have the stock indices across the planet minus the Nikkei was fine, but the rest of the Chinese markets in particular were not very good. And Europe is doing fine. 1% moves are nothing. They're just a normal day, really. And so you can see all the European indices are very firm. U.S. indices relatively firm too, same way, except for the NASDAQ 100 or the Tech 100 that's on Dukascopy because of Netflix having its issues. So we see the weakness there. But that's about it, really. So now, what else can we say about it all today? More than anything else is that oil had gone down yesterday pretty well. And then today it seems like we're just a little pop, nothing major, because it was down about $6-7 yesterday. Maybe $5 at one point. And now what do you have here? You have it up $1.50, $1.30. So, summer season's coming on. Things, the heating season is starting to disappear on us, thank goodness. We see natural gas ripping high and strong, and it's like, maybe they can back it off a little bit over time here. All right, we see the Swiss. There's the Swiss right there. You can see that. That's all green on the J4 axis. You can see right there. Pressure is building. We have it over here on Chicago Quant. So you can make that bigger, or just go like that. If I go like that, just to emphasize it, and then widen it at the same time. This way everybody sees it clear. The resolution sometimes is tough. You can see here we got this down move kicking out pretty strong. Still a green dot, but the body has dropped. So it's just like J4X, with the green hinky ASCII, and our line rolling over. You can see that right there, and at the same time you can see same thing is happening there on J4X. Let's check the chat line too to see if anybody's stopping in and saying hi. The interesting part out of it all is I was thinking this morning, literally doubling the Fibonacci and going back to like 6 years ago to see if we could find the new range for some reason more than any of the other pairs trades. Well, also the yen, but more than that is that most of the other pairs trades pretty much are adhering or they're sticking to their trading ranges of the last couple of years. But the Swiss, that's like the other flight to safety product, and they're not flighting to safety there. They seem to be moving around it at the moment, and it keeps on seeing new moves on the upside, higher, or I guess you could say low. It's moving lower against the dollar. That's what it really comes down to. King dollar is being king dollar, even with a Mr. Biden in Washington. It doesn't really matter at this point. It's the fact that they're paying 2 3/4 to 3% on U.S. bonds. So you buy dollars, you buy U.S. bonds, you get your money back, and you get an interest, even if it's getting beat up by inflation. Whereas in most of the other countries, you're not seeing that return in income, which is that magical concept that people have forgotten about because of the way this quantitative easing thing has occurred. And it seems like we're coming to the end of the quantitative easing. It gets that feel like we're coming to the end. But, let's put it this way. The best I expect to see the bonds hang out is up in the threes. I have my doubts we'll see a 4% bond. I could see 3 1/4, 3 3/4 on some type of odd spike over the next year, but not really more than that. I kind of think it's going to hang in the threes, 2.5, and I think they will do another half a percentage point increase somewhere along the line. Didn't they do it already? I'm even questionable about that, but I do. They're going to raise the rates just to prove that they are fighting inflation. And then I guess what it comes down to is looking at the Swiss there. the dollar Swiss, obviously, I guess they're not raising the rates enough over in Switzerland to compete as or participate. I guess you could call it participate, really. Participate as a flight to safety pairs trade. All right. So from there, if there's no questions, we will slide our way over to the euro. The euro's been hanging out down on that bottom end of the range, as you can see right there. On J4X, you can see the same situation right there. It's got a little greeny thing going on right there. You see the white line turning up. Our volume is kind of wishy-washy, but is making higher lows, so that's a positive thing. And then when we look at the Chicago quant side of it all, let's wind that out too at the same time. You can see it's just hanging along that bottom end of the range. And we are right there, flirting into the weekly, daily buy. That's daily. The weekly, basically is saying long-term money doesn't have any love for the euro. That's the problem. They're just not there. And back to the J4X, as this drops, the volume, ask volume indicator drops. It is showing us that there's not a lot of hunger for this product either. And that's where we really stand at this point, is that nothing really runs in the currencies anymore, unless there's something like a currency should not be named, or Turkish lira. Turkish lira has cleaned itself up, which is really nice. Hey Robin, how you doing today? Yeah, it's so nice to see that's cleaned up. What you think of the milk chart I sent over to you? That thing's been in a weekly buy since oh my God, it's like 7 months ago. 6 months ago? Something like that. Yeah. So with the euro just hanging at the low end of the range, you got the Swiss kind of pushed itself way out of its range. And I know that we look at the cable. Let's take a look at that. But the cable's about the same way as the euro is, in the sense of it's staying right around the range. In this case here, it has this drift underneath the range right there. There again, and there. We're all underneath that little under the range situation. We went into the weekly buy right there, and obviously they did not want to hold on to that. Long-term money said no thank you, and here we are again, cleanly underneath, and looking like we will get into that weekly sell again, even with it being Wednesday. When we look at it over on J4X right there, you see 4 bars of red, just like our dots pushing down. Oh, good. Yeah, it does. Milk trends. So it's good. It looked the daily looked very good. The weekly barely. It's only had two. I think it's over a 12-month period. It's only been in a weekly buy and a weekly sell, and that's it. There's Jordan. Hey, Jordan. So yeah, it's going to be an interesting product to pay attention to. The cable, as you can see there, in some ways has that reverse head and shoulders look to it on a very short-term basis for the last couple of weeks. And maybe they'll put a bottom in here and start to lift again, but that was a real surprise. Get into that weekly buy, and it just rolled right over. And we slid into that daily sell on Monday morning. Right there. Let me put that daily sell back in there. I don't think we saved it yesterday. Let me try saving it this time. Save. There we are. So yeah, it pushed into that. Now today, it is higher than where it went into the sell. And we are below the 0 line here on the weekly. So it's a real dodge those bullets type of trade. It's kind of saying, yeah, you were short, you made some money, hopefully you have a good stop on. That's what's screaming at us in our faces. Would like to see this product base itself, turn up. We would over here on the States, we would like to see King Dollar calm down. It's the dollar is enormously strong at all-time highs, and it doesn't seem to want to give up anything. So, see anything you want to look at, Jordan? Any particular product we can go look at? I'm in the mood to look at something fun. You can see here the currencies and everything else is kind of stuck in its little... I mean, we've gotten some great signals. We've made some good money out of the currencies, but we're just always looking for the next good idea. You never know when someone's going to discover it. Somebody asked for something a couple days ago. It was really interesting. I forget what it was, but it was kind of neat to just see. Oh, I know it. It was Janos yesterday with Lock Martin, the stock. That's what it was. Janos was looking at Lock Martin. Yeah, I'll tell you, that one has me like jazzed. I think I put a title on there. The way the dollar yens goes is the way. Oh, look at that little pressure there this morning. There's that daily buy. We've had 2 daily buy. Well, you could say I guess 3 daily buys in that in that period. But since we went into a weekly buy, we've had 2 daily buys. For what's that? 7 weeks. We've had 2 daily buys and 1 daily sell that lasted for a whole 2 days. Went into the buy there. Went into the sell up in here. I mean, talk about nice, consistent trading. Wow. Too bad we didn't put that article in for Dukascopy, or put that our yen article in to Dukascopy instead of the other place we sent it. But yeah, look at that. It looks like what's that? I think I looked back. It was it's something like we're playing with 9-year highs now. That's what we're playing with, and some of them are flirting with even further back, like 14-year highs. Let me see. I can show you to you on. Let's do it right here. Let's go over to where's it at? Right there. Let's put a weekly up there. And look at that. Last time we were, well, you see right there, that's 2015. Took out that high. Took out the high of 2008. So what's that? That's 14 years. Whoa. So that's going all the way back to 2003. We're looking at 19-year highs in the yen. And I saw a great article this morning. I was reading something about, they were talking about how, oh, I know what it was. It wasn't an article. It was listening, it was on the business channel I was watching very early this morning. They were saying that the way the Bank of Japan said that they were going to stop the easing, like, I don't know, like a decade back, and how they just kept on doing it anyway. And, ever since the Nikkei had gone up to like 39,000 back in the late 80s, early 90s, and then fell and has never seen that again, it really makes you, just concerned or fascinated by the way it did that. Everybody thought, oh my God, the thing's going to 50,000. Instead, it goes down to 8,000. It's like, oh, how many times have we seen that with the Bitcoin? It makes it odd, doesn't it? But yeah, there you go. And then let's get back to Chicago Quant for you. Oh, let's make that a daily too, like so. Yeah, and that big spike, that's, I don't know how else to describe that. It's like the inflation. Also, they had stopped doing what they were doing for a long while now. What is it, about 6 months? They started paying interest on bonds. So they were in a heads up already. They were starting to think, okay, what can we do here? The United States is going to start paying higher interest on their bonds. We got to start paying some interest on our bonds, that type of thing. I think that was part of the whole process there. But yeah, that's a good one to look at. And then from there, we'll go take a look at Turkish lira. Right there's the Euro Turkish lira. Still staying inside its range. You can see the little white bars. I think we should make those things thicker or something. See if we can do that. Style? Yeah, maybe that's what it is. Style. Yeah, there we go. And there it is right there. And you can see that's the daily bar. They haven't hit the top end of the range. It keeps on finding ways to fall down or do sloppy stuff. This bounce here has been kind of surprising. I thought we were going to get into that weekly sell. Boy, did I was hoping to see us get into that weekly sell. Let's move the box over now for another couple of weeks. Right there. Now the daily is pressuring its way back up again. We'll see if that closes in a daily buy today. It has shown to be, driving sideways down for months here now. And for those traders that don't hear my normal shtick about it, the central government there in Turkey has made it that when you buy their currency, they give you a free put option to protect it. So that's a good reason why money is staying, I guess you could say, or is comfortable now in Turkey. All right, from there we'll drift over to the Canadian. Let's see what the Canadian's doing. Oh, good, pushing it down. A little surprised even that there was that there, but maybe it was just that action, the type that needs to be, I guess. I keep on expecting to find this Canadian to move down more and more, but it's really dragging its feet at the center point. Let's just show you there. Yeah, see, that's the center with the green line. So it seems to find it, get maybe break down a little bit around it, and then perk back up. And let's see, where's that at? Right here. So today we are flirting with the daily sell as we speak, right there. Very easy flirt, isn't it? And this at the same time is on that long upwardly slope. So we got the weekly doing the opposite action there. It's trying to show us that it wants to get going on the upside. Well, we'll see who wins in that battle. Let's put it up on J4X there, right there. Yeah, look at those two red bars out of the last four. That's interesting. Long tails on them. Maybe it's going to break down. We'll see. I don't have much confidence one way or the other. They have raised their rates. They did raise their rates a 0.5 percentage point. I guess it was 2 weeks ago when the Fed was doing its meeting. What do they call that when you do it ahead of time? There was like a defensive move. They pre-did it, and they're trying to stay in line, I guess, with the dollar. The American dollar. But that is the horse race that we're watching here when it comes to the Canadian itself. Now, normally when the Canadian's going down like that, that means that oil is going up, and it is up. We saw that a little while ago. And I'm not even sure what they're doing to gold. Gold was kind of passive the last I saw it. I have gold trading at, where's it at? I just saw it. There it is. Yeah, I have gold trading down $7. So not the best of the game, but then the thing that keeps oil keeps the Canadian actually gaining value more than anything else is the oil. And let's just show you where oil is right now on the screen real quick. Quick like a bunny. There it is. You can see it's up. But we're in that daily sell from there, and it's not doing us any good, and we're in the weekly buy from there. So again, we're stuck in neutral, not any trade at all. Sometimes you have to just stand there and wait for the numbers to line up so you can get into a trade. It's like waiting for a bus. We all queue very well around here. We're very good at queuing. Indeed. And then, let's go check out the gold. And then there is the gold. Gold showing the opposite action of the oil, which is kind of rare. Went into the sell there yesterday. We're in the weekly sell at the moment underneath the zero line. So a little pressure there on the gold. And that would be a reason why we probably saw pressure on Canadian yesterday. But now that yesterday oil and gold both were down. Now today we have at least oil starting to pick up its head and look up again. So that's probably why we're seeing that strength in the Canadian. Just a guess. In the end result, we know that we follow the fundamentals. We don't follow the fundamentals. We follow the quant math itself. That's the safest way of trading anymore. Following the quantitative or the mathematical or technical is the safest. All right. From there, we go over to the South African Rand right there. Since gold is going down in value, and this is not that far-fetched to believe this will be going up against the dollar. So it's losing money against the dollar. And you can see the weekly. Uh-oh, look at that. The weekly's even joining into this party. Let's just show you over there on J4X. Let's see. Right there. And so you see the South African Rand at the highs of the day starting to reach up, and we got a weekly both. There's an article that might be well worth writing, Robin. Buy the ZAR. Looks like it wants to take off back up into the 15 3/4 area, or 15 and a half. Not a big move, and it's pretty stable, but overall impressive. CAD dollar, yes. Let's see. What else can I say to you about CAD dollar? I'll go back to that real quick for you. Just the fact that it's still in the weekly sell here, and it's going into the daily sell there. And oil is going up. We should see some strength in the Canadian against the dollar. So in other words, it should go down in value. And last time we saw it anywhere as decent was down in the 123s, something like that. And right now we're trading at 125 and change. Does that make sense there, Jordan? All right. From there, from the South African Rand, we'll go to the currency that shall not be named. That's locked against the dollar now with oil and gold. And you can see we were in a daily buy there and in a weekly sell. So this thing doesn't know which way it wants to go. The short-term money is sideways. The longer-term money is still not believing it. They're just kind of staring at it. We'll see when it finally changes weekly or sees a weekly change itself. Right now, it's not doing it. All right. From there, we saw the yen already, but we'll just take a quick peek again. That's something. What a run. From the 115s to almost 130. What's it, 129 and change? 129.40. There is an interesting peak there, just like these peaks right there, too. Right there, that's a banger. And this is looking so firm on the weekly that there's not much really to, be concerned about. Excellent, excellent, excellent. Let's check out the Mexican peso. We'll head back to the North American continent there. And there is the peso. And let's put it up on. Just want to see the yen real quick on there. Yep, all that green. And the last one is the Mexican peso. And it's sitting on the bottom end of its range. Not really pushing one way or the other, just kind of happy, sideways, quiet. Probably like, glad we don't have to give out puts. And you can see it's been in a daily buy for a few days here, since right there. We should put both those in there, the sell and the buy. There's the sell. And there's the buy. There we are. Let's save that. So let's remember to save that. Save-a-roo. Now that pretty much completes us with the currencies. Unless someone sees something they want to go look at, we'll just march around now, take a look at the precious metals, take a look at the energies, go over to the stock indices, and anywhere's in between them, you can ask a question. We'll stop what we're doing and take a peek at it, because that's one of the things we believe in around here: free speech, free people, free markets. Let's see now. Right there. There's gold on a second day in the sell. The weekly is playing with that. There's pressure there. There it is on J4X. Same thing, a couple reds. Pressure's on. White line underneath. Let's see, what else can we say about that? Let's see. Just that it's flirting pretty firmly to get into the sell, but no real excitement at the moment. Well, actually, that was pretty good. 2,000 almost to it's a $50 drop in 3 days. That's enough excitement. That's true. And then we'll take a look at silver, acting the same way. In this case here, the thing couldn't get into the buy for this move up. It got into the daily buy, so you knew not to be short from here, but it just refused to turn. Let's show you on J4X. There we are. Now it's pressing down again. Let's see. So from there, we'll go take a look at copper. There it is there. So this has just 2 days in the sell, and it's flirting with the weekly with no problem. And over in J4X, you can see the same situation, aiming down right there, and a red. Now, I always, to me, in this last century, in this part of the early century, here we are in the 20s, and I always think, when I see copper, I think China, just because of all the construction that they do. And so, to me, that's like some type of, Pavlovian thing. I see copper and always surprised that it's not firmer because of the way, China treats it like they're gold. It's like a gold to them. Because of all the building that goes on over there. They build these giant skyscrapers, and then after a while they just knock them down and build them again. They've got this President Roosevelt attitude about economy. From there, let's take a look at Bitcoin. I think Bitcoin went into the buy there, so this is the third day. You can see the strength after being in that long sell, which flipped back and forth a few times trying during the day to shift out. You see we're still in the weekly sell, but it's very close to getting to the daily, the weekly buy, confirming that weekly buy. It's getting very close. Just not yet. Just not yet. Needs to come off that low there. I mean, we got the blue line at minus 167, and the rest of them are still minus. So we definitely need some buying in there. But when it comes to the daily, it's basically confirming that there are buyers out there on a short-term basis. Let's see what it looks like on J4X. Right there. And you see that white line ripping up, heading hard and strong up. Maybe we'll get back into the high 40s. I've not gotten the flavor yet or understanding of the crypto, what makes it float its boat. There's things that's going on that I'm very surprised that we did not see higher prices. So to me, it's a whole new asset class, but it's not a currency. But it's a new asset class of some form that basically, if you have no confidence in the central bank, Yeah, you can use that. Now, obviously, you can't be like a China or even Europe, trying to move big capital into it. I guess as time goes on, we'll see more and more capital build up, and the cryptos will be more comfortable with themselves. But coming down in this noise of inflation from 69,000 or 70,000 to fall to 33,000, losing 50% of its value, that really does not bode well for what we think the cryptos can do. So that's one of the big things right there, is we're just trying to get that understanding of exactly what people want out of the crypto. Minus big government, minus people being able to see what we do, minus all these wonderful things. Let's see. Let's jump over to the energies. There is spot oil, as we looked at it earlier, showing strength. And let's see what Brent looks like. I saw something. Where was it? Paraguay? One of these places. They were saying that it has like a Brent type of oil. And they think they can generate almost 1 million barrels a day. Let's see. Where is that? There's that. Brent. There it is. You see the Brent is trying to roll over from yesterday. Whereas our spot is already moving up. And that's kind of... I have a hard time believing that oil can really fall down. I guess we'd have to lose this whole military thing going on in the Ukraine. And I'd imagine that's part of it, part of the strategy with Mr. Putin. Just keep the war going on, and it'll keep our prices up, and we'll find a way to suffice. That's the way it looks to me. Remember, now I saw a headline this morning that said that Germany was going to stop importing altogether in the next week from Russia. It's fungible, Oil is fungible. So in other words, if you don't buy your 1 million barrels a day from this country and you buy it in the open market, your $1 million worth of, or 1 million barrels that you had been buying from that specific customer disappears in an esoteric way only, because it's still in the marketplace. And so if they can get 1 million from you and they got nothing from you, that's always pretty good. And that's how it usually works too in the end. Oh, interesting. So from there, we go from there to natural gas. Right there, and there's nat gas. You can see we went into the sell yesterday, kind of muttering around in there now. Again, the weekly's way too strong, for it to really be breaking down. But we keep an eye on that and see. Let's go over to J4X and let's see. There's the U.S. dollar. The dollar-dominated oil, natural gas. It's here somewhere. There it is. Right. No, that's the euro one. This is the euro. Let's take a look at the euro. Still in the 29s. Yesterday it was around 29.47, 48. Today it's at 29.29. A little weakness there. Nothing major. But boy, still compared to the United States, where we're 3.5 times cheaper. We're trading in the 7s. That's trading in the 29s. Yeah. So 3 times 7. It's almost 4 times difference. It is 4 times difference. So it's 4 times. If you multiply what we're doing here in the States, that's 28 and change, 29. And there you have it right there. The European natural gas showing that same stuff. And again, Russia exporting it, and Germany now says, okay, we're not going to buy it from you. So hopefully they'll have other avenues they'll be able to collect it from and use it from that particular way and direction. All right. So that completes the energy sector. And we've seen the gold and the silver. So let's check out some of the stock indices. See what's going on there. There's the NQs. Also, let's put the let's do this. I'll close that, and let's open up the intraday at the same time. There we are. We'll get that to fill in, and let's jump over to, as you can see real quick though, right there. Let's just go like this. The S&P went into the sell there. What was it? That's at 801. It's at 806 now. So you had that downward pressure already. Now we're at the low end of the range. Now let's look at the daily on this. Right there. That's the S&P 500. Last couple of days have been in a daily buy, and it's been finding ways to go higher. But look at that weekly, which is at one point, I guess yesterday and yesterday morning and Monday, that was below the zero line. There was pressure on it, but it has stopped, and they're buying this stuff. And again, we are the last resort, basically. In other words, if you want to make some money in your investment, especially on the fixed income or the bond stuff, well, you got to come to America. That's where they give you some decent interest, and you can get, basically get rid of it when you want to. They do invest that way. They do look. I know it's hard to believe because there's like a third of the traders out there they're not aware of a non-QE world. In a non-QE world, earnings mean something and profitability means something. But in a non-QE, in a QE world, boy, sometimes you just have to scratch your head and wonder, why are they buying this or why are they buying that? It's just not the smartest move. Now that's the that's the S&P 500. You can see it's down just a little bit, nothing major. Closed yesterday at the 59 area, and it's trading at the 53 area, so it's only down 6 points. And then when we look at the intraday trading, it's still in the sell, slowly drifting away. And barely moving. All right, from there, we'll go over and take a look at the NAS 100 right there. And it's climbed in the daily buy yesterday. It's holding up just a tad underneath at the moment. And the weekly is flirting around to try to get into the sell. So that is turning into another one of those horse races that we want to watch and see. Can't wait to see it by the end of the week, of course, but sure do want to see it and watch it and see what they're doing with it. And you can see, even so, they're still trying to play with that sell there. Let's put it up on J4X. You're here somewhere. I seen you. There you are. You can see the Tech 100 there. It's trying to flirt in the upside direction. You see that white line being in a white above the zero line, or the dashed lines, that is, for like the last 4 or 5 days. You see we went into a daily buy yesterday, and our weekly is on the edge of climbing back into the buy. Yeah. And what would give it some energy for that? And that would be is that there's buyers, more buyers than sellers, it seems like. And again, there's nowhere else to go. That's why it's nice to see Europe participate. I like it when Europe participates because it's nice to not be the only game in town. And then from there, we take a look at the Dow Jones Industrial Average. You can see that's doing the same thing. Pushing up and away. And the weekly is holding up pretty well, which was also flirting with the weekly sell on Monday. And that pressure is probably going to hang out on the positive side for a while. Because, that's where the money has been running to. They've been running to the Dow Jones Industrial Average and the S&P 500, and they've been drifting more and more away from the NQs or the Tech 100, just because they're so cash intensive, so they have to borrow, and because they have to borrow, it makes it even tougher. In the sense of they're not just fighting the headwinds of the buyers themselves and sellers in a world economy, but they're also dealing with the seasonality of being in a swimming pool and so forth. All right. From there, we saw the Bitcoin, and then, like I said, it acts too much like. It definitely acts way too much with the rest of the gang. It doesn't do. What we were hoping for it to do would be break away independently. Oh my goodness, there's inflation. Okay, you're trading at 68 or 65,000. I can see it falling back to 58. And then taking off back up into the 70s again and 80s. But I can't see it. It was at 70 and change. And inflation was confirmed by the Federal Reserve. And what did it do? It fell all the way down to 33. So it makes it really hard to pin a story to this crypto. And I always say that over and over again, is that cryptos are kind of like the new asset. They're not really an inflation fighting machine. They're not really, I guess you could say that they are the opposite of the central bank to a great extent. People cheer that on. That makes them a new asset class, but it doesn't make them a currency. It just means that it's easier to transact because it's all electronic. So in other words, it's like using Venmo or PayPal to pay in different currencies. All right. And let's check out the intradays and see what's going on there. It's still in that sell. Look at it. It's like just kind of moseying along. Now something's wrong there. Let's give that a refresh. Let's close that. Close. We'll reopen it again. There we go. Now it's ticking again. Let's see. Are we seeing it ticking or did it stop again? Looks like it's still ticking. Yeah, it's ticking away. And so we've just drifted and drifted and drifted. I'd imagine the Netflix. Let's see what Netflix looks like on here. That could be interesting. There's the Netflix. Smesharoo. We're in the weekly sell for a couple of weeks. Now we're clumsily rolling over. This product, I think it was a $700. Was it up in the sevens? I think it was. Let's just scroll back and see. There's the sixes. Yeah, it was in the 700s. No more than at the top of the market, basically, back in November, December. It was in 700s. Or 700 and change, right around there, $799, basically $700, and now it's trading at $250. So that's down basically 66% or 63% or something like that. So it's done a 2/3 down, and it's going to make things noisier. And now they say that everybody's going to have to rethink these streaming services a little bit because of. The Netflix was, I guess, the primer. It's like the Wisconsin when it comes to milk. And so you can see there's the Netflix. And that's what the pressure is on the NQs because that's in that index. All right. Back to there. And then, like the Dow, you can see the Dow's minus 12 points. The S&P is minus almost 6 points, and this is minus almost 39 points. So that's that's the Netflix putting the pressure on, because it is permeating across everywhere. Oh, what do we got? We got a message from somewhere. Apple phone. No, thank you. Where else do we go from there? Let's see what Apple's doing this morning. Apple's lifting up this morning. Look at that. They don't care. It's trying to get into the buy. And it's hanging tightly in the weekly buy now since right here. So from the 155, 157 area, and ran back up to the 180 area, and then now it's pulled back and still in that weekly buy. But the daily sell started off right here and stayed in sell for a couple days, back into the buy for 3, and then boom, right back into the sell there at the basically the 170 area. Excuse me. And then you can see it fell back down into 164 area from there. All right, let's see what else is there. Amazon. Let's see what Amazon's doing. Amazon's holding up pretty well. They're still buying in there. Now, notice that the weekly is being pierced right there. So there's pressure on that. Now they're supposed to, I think they said they were going to split the stock 20 to 1, something like that. Or is that Google? One or the other did. Someone came out with that. Said they were going to split the stock 20 to 1, which would be real nice. Instead, it would be like a that would be like a $175 stock. A lot of people can participate in that. Much easier than 3,000 and change. All right. What else is in the... Let's take a look at the interest rates themselves. And right there is the 10-year bond. Flirting by a hair of its chinny chin, as you can see right there, the 02. And let's see what it looks like on J4X. Let's see, where is it at? I see it on here once in a while. Dollar index. I see it every so often. Treasuries. That's the German Treasury, the Bund. Where's our Treasury? It was in here somewhere. Huh. I don't see it. Where are you? We looked at it too. We've looked at it through this a few times. Don't see it at all. And what's interesting about that is we have a client that watches both the 30-year and the 10-year. And check this out. The 10-year is definitely not participating like the 30-year. They're both moving in the same direction, of course. But it's not getting into the daily buy, and it's still staying in that weekly sell right there. That pressure is on. And that's going to be, that's pretty much the biggest question of all with the bond vigilantes is, what are they going to do with interest rates? With interest rates the way they are and this inflation, you got to do anything you can to put a collar on, an option collar, and lock in the dividend. In this case here, I guess you could buy the bonds and sell a call and buy a put and lock in your interest rate, because one thing's for sure, when bonds make their aggressive, that's why they call them the vigilantes. They call them vigilantes for a reason, and that is that the bond market is an over-the-counter market, and so it's only the futures that's the listed market. So you have literally millions of different issuances floating all over the place, and it's an over-the-counter market. So there's not a very firm bid on a lot of this stuff. I mean, I'm sure there's individual brokerage houses and companies that make markets in it, but it's not the friendliest world when it comes to trading compared to currencies where they're much more liquid, or stocks, they're much more organized and defined. When it comes to bonds, they become, boy, there's no describing it. That's why they call, well, I guess the best way to describe it is they're vigilantes. they break the law and they do what they want and they make their trades, and it can happen in seconds. In other words, you're looking at a firm market, and all of a sudden, when I mean firm, there's a solid bid and offer, and you see some volume, and then the next thing you know is they go flying, just well beyond the range. They jump enormously if there's some really incredible news, be it whatever direction, and there is no stopping it. I mean, it just runs. So, all right. From there, what else do we look at today? We've looked at them all. We've seen the metals. We've seen all the stock indices. It's a quiet day, keeping us quiet here. Let's see what I just saw the dollar index. Let's see what the dollar index is doing. Right there. Yeah, it's moving down a little bit. You can see it's breaking into the sell there too. So it just jumps into buy yesterday, and we're in a weekly buy in that. So there's a losing trade at the moment right there. Let's see what it looks like on J4X. Because I did see the dollar index on here. Right there. Things trading at 100 and change. All-time high still. Wow. That is something. What a powerhouse at the moment. Just doesn't seem to want to stop. All we do is we keep on seeing the strength, and it just refuses to back off. So, what else can you say about the dollar? I mean, we see it in all the currencies, and as we saw with the Swiss, it's moving back down. Swiss is gaining some value again, but overall, it seems like we're really trapped in that king dollar position. What a strange situation that is. All right, I'll hunt around and see if we can find something else to talk about. Let's see. Let's do it off of the cotton. Look at that. Let's see what cotton looks like this morning. A little weakness there, not too bad. Look at cotton all the way up to the 145. One of the things that really amazed me at cotton when I first started trading cotton decades ago, that there was like this move, I guess, because of the Civil War here in the United States in the 1860s, and I was trading, off and on. Cotton was the next pit over, and I might fool around in there once in a while. And cotton in the 90s, 80s and 90s jumped up, I think, to like all-time highs, and the all-time high that it beat was like 1863 or something like that, which was just incredible to even think about. That you something that could trade for 100 years and never make it back to its all-time high, which kind of makes me think about the Nikkei in Japan. How a solid, firm economy like that got to 39,000 and fell to 7,000, or like just a little under 8 or right around 8,000, and then now it's trading at like 20. Let's see where it's at now. I think it's like at 27 or something like that. And it really says a lot. It really does. Activate. There's the Nikkei. It's put the right month in there. It still has the March in there. And symbol. And it does. It really says a lot. That we may not in our lifetime see the Nikkei get back to its natural number. I have a hard time believing that, but it could. It literally could be that way. And like I said, when I looked at, yeah, there we go. Okay, close. Oh no, I got to add it. That's what it is. Future. NKD. Yeah, so if cotton could wait a whole, century to take out its high, then if they don't get their act together, we could see the same thing happen to the Nikkei, where it does not go and take out its high in our lifetimes. And that's something, isn't it? And that's something to even think about. And don't, look at the Chinese market. Chinese market's been like the same way. They have not been able to get like the Shanghai and so forth, they're 65% or 60% from their all-time highs. I mean, they're so underwater. We have Citibank like that here in the States also, which always amazes me that they can flirt around like that, where they are just so far away from the healthy side of it all. Here we go. Here's the chart. And a buy for the last couple of days right there. And you can see the weekly is just about, it went into the sell last week right there. Second week in the sell, and now it's flirting with the, still in the sell. You know, they're still not perking it up any. But it's definitely something to think about. So we could go on a long time before we see that money's made back. It was nice enough that it got up to like 28,000, 29,000. I thought, wow, that's really cool. Only 25% off its all-time high. That's a very positive thing. Something we have not seen, you know. All right, traders, if there's no questions, we'll get out of here. And we will catch you all on tomorrow, which is like Thursday. Like the week is flying by because of the holiday. So, what else can we say about anything else? Is that happy trails. Happy trails to you until we meet again, which will be tomorrow. Happy trails to you, all our trading friends. Catch you later, traders. Be safe, be smart. Do good money management. And if you got a question, just fire it out on the webinar here each day. Ta-ta for now.